So in this video, I'm going to tell you 5 things that I implemented in my trading that significantly increased my win rate when trading supply and demand. I trade supply and demand on the lower time frame. Literally my entry, my analysis, everything pretty much happens now on the 3 minutes. So this means I find setups every single day. Because I find a lot of setups, it is very important that I have a high win rate, otherwise I'm going to be taking a bunch of trades and just losing a bunch of trades. So I have to take the highest probability trades, make sure that everything's aligned properly, not just to have a high win rate, but also have a good RR as well for those losing weeks that might happen. So the first thing is, if you trade in a lower time frame, anything like the 1 minute, I don't even recommend the 1 minute, but let's say you trade the 1 minute, the 3 minute, the 5 minute, I highly recommend you do not use aggressive entries. Aggressive entries is basically when the trade hits the zone, supply and demand. If you know how to trade supply and demand, you're watching this video, so I'm guessing you know how to trade supply and demand. But once the setup hits the zone, don't just enter the trade blindly without waiting for some kind of confirmation that the trade is going to go the other way. Most people set an entry at that zone, leave it, set and forget it, and just hope that when the candle hits the zone, it's just going to reverse, but this does not always happen. So you might end up taking multiple trades like this, that the candle just blows straight through it, and you're just losing money for literally no reason. Now, I understand people like taking aggressive entries because it makes you more money, but there's no point actually losing more in the long run just because of high RR. Now, the second is fair value gaps. This for me is one of the most important. If there's anything you can leave this video with, it would be fair value gaps. Fair value gaps is basically a point in the chart where price has not really been tested. So let's say I'm selling you this phone, for example, for £1, and then price shoots up from £1 straight to £10, right? I've not actually offered this phone to you for £9, £8, £7, £6, right? At some point, price needs to come back to those points and offer buyers and sellers that price value. Basically is how I kind of like to describe it. So fair value gaps is important because this shows us where price moves to. So every single setup you take, for me, my high probability setup needs to have a fair value gap attached to the zone, because not only do price actually reacts based on fair value gaps, price also reacts on supply and demand. So when you kind of add these two together, you have a high probability that your setups are going to win. So it is super important that you find a way to have fair value gaps implemented to your strategy, even if you don't trade supply and demand. But every single setup you take, I recommend must have a fair value gaps. Literally, I don't remember the last time I took a trade without fair value gap being present. Don't do it, because I just noticed a significant increase in my win rate once I started taking these setups that has a fair value gap directly attached to my zone, not 1 centimeter away. Not, you know, it needs to literally be attached to the zone. This is super important. Now for the next, although I mentioned that I pretty much do my analysis, entry, everything on the 3 minute, you do need to look out for opportunities to when you can actually get more RR. What I mean by this is using higher time frame confluence. For example, one of my biggest trades that I took was on XAUUSD, and how I was able to absolutely smash this trade was because I entered then on the 5 minute, and from the 5 minute I looked into the 15 minute, using the 15 minute for my TP. So this meant that I had a very, very early entry, also a tight stop loss, but I'm treating the trade as a 15 minute setup because both of them align. So this means that instead of going for like a 1-to-1, 1-to-2, you can go for 1-to-3, 1-to-4, 1-to-5 instead, with a very small stop loss as well. So continue to follow your setups and your rules, everything as it is, but always check the higher time frame. If both of them sort of align, then you can treat the setup as the higher time frame and leave when you would on the higher time frame. I usually, when a setup kind of falls in over 15 minute, I'll leave it like 1-to-1, just because I'm not a fan of staying in trades for long. But this usually means, because I'm entering on a 3 minute, for example, and I'm leaving with a 15 minute 1-to-1, that is a very, 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 very rewarding trade most of the time. That's when you can catch 1-to-5s, 1-to-7s here and there, right? Sometimes you get lucky that way. So always kind of have this at the back of your mind, because why not just take these trades once in a while? Sometimes those trades can be the reason to you having a winning month or a losing month. Next, we have the key to overcoming greed, and this one is one that took me a while to come to terms with, but I see the reason to why most people that are profitable in trading kind of do this. And for me, this was just, once I get my win, I'm done for the day, right? Usually why we don't do this as traders is because we usually have small accounts. When you have a small account, even if you get a 1-to-15 RR on like a $10 account, $50, $100 account, it's not much. It's not really gonna transform your life, right? Like it's not doing too much. especially if you're risking 1%. But let's just say you have a standard 100K account and you make 1%, that's 1K in that day. So that is significantly higher. So generally, just try to have a bigger account. And once you get that first win, call it a day. Because if you win and you take the second trade and second trade loses, plus commissions, plus spreads and all, now you're probably going to be negative or break even. And now you want to make more money. Then you take the third trade and now you lose that third trade. Now you're losing. That's 3 trades already. And now you turn the winning day into a losing day. And you might end up taking the fourth just to at least get to break even. And now it just seems like you're chasing trades. And that's how you turn a 1% trade into like a negative 2% or even negative 3 or 4% if you're going crazy with it. So if you just win on the first trade, sometimes just call it a day, wait for the next day, find other things to do. Don't just be on the charts 24/7. For me personally, doing this increased my win rate significantly because it's just like I'm not stressing my psychology too much. I take my first win and I'm done, and I focus on other things, build other things as well. You don't also want trading to be your only source of income. So work on other things whilst trading. Build something else as soon as you got your first W and just get off the charts. Now for the next, this is similar to the second one I mentioned, but this is getting your entry in a small RR. Something like the 15-minute, I would usually never do an entry on a 15-minute. To me, it's just too long. Do an entry in a 15-minute, you're kind of waiting hours, 2+ hours probably to maybe leave that trade. For me, one, that's too long. I'm a scalper, I don't really like waiting that long for my setups. But secondly, it's just usually getting your entry on a small time frame. This usually means getting a high RR. Having a 15-minute as an entry is a bit too high for me. Some people go as little as the 1 minute to get their entry, and this significantly gets them those crazy RRs like 1 to 15 and stuff. There's usually no way you're getting that entering on the 5-minute or the 15-minute. That's just probably crazy because the trader's probably going to turn around on you unless you're somehow doing this consistently somehow every single day. But I'd go down to the 3-minute. 3-minute is my sweet spot, not too many fakes, not too many craziness happens there. So I enter on a 3-minute, and this is how I'm able to sometimes, using supply demand, get 1 to 3s, 1 to 4s sometimes. Once in a while, you might get like a 1 to 5, 1 to 7. Those have come up as well. But generally, I don't chase these anyway. But the idea is that you want to make sure whatever strategy you're using, try to find a balance of reducing the time frame and still winning consistently. Try to find that sweet spot for you. I did try the 2-minute. 2-minute was a bit too crazy, so I stuck with a 3-minute. And now for a cheeky little bonus, there's nothing that is going to make you win more trades ever than having confidence to take the trades in the first place. And whenever you hear confidence, attach confidence to backtesting. Always do it. Confident, when you hear confidence, backtest. When you hear backtest, think confidence. Having confidence in trading is big, it's all time, it's the one thing that you need. And you need to just backtest a lot. Put a lot of hours into backtesting. In fact, probably backtest 2 hours a day minimum, I would say. Especially as a beginner trader, maybe even more hours. Because the more you do this, the more confident you are. The more exposure you get to the charts, the more confident you are. You can think of footballers, anyone that does any sort of sport. You see that they get better by just being there. Footballers, they kick ball. The more they kick the ball, the better they get. Basketball is the same thing. Whatsoever you do, it's the same thing really. So us being traders, the more you're in the charts, the better you get. So you need to expose yourself to that as much as possible. And I guarantee that as your confidence increases, you'll be more confident to take those setups that show up that you probably missed that then, might affect you in the long run. So I hope you found some value in this video. If you did, be sure to like, comment, and subscribe, and I'll see you guys in the next one. Peace.